Big investment banks are still facing litigation and other risks years after the financial crisis. Moody's has tallied up the damage in a new report. Associate Managing Director Ana Arsov joins me. Good to see you here, Ana.
Thanks for having me.
So we're looking at, according to you guys, $219 billion in litigation provisions just since the crisis. Of that amount, which is really huge when you think of that number, the headline number, which banks really are faced with the biggest burden?
Out of that number, I think a very remarkable number is that almost two-thirds is related to U.S. firms. 5 of the, what we call the 14 global investment banks we cover in this report. And really 2 firms, JP Morgan and Bank of America, are the firms who actually have close to 50% of that toll. Bank of America had $70 billion itself, contributing to the $219 billion of provisions recorded between 2018 and 2014.
So at this point, do the banks have the amount of capital they need to cover any potential costs?
The banks are, we believe, solidly capitalized. They have strong profits, relatively speaking, on enough profits to cover any further litigation charges. But nevertheless, we have to keep in mind that any litigation charge and upcoming litigation issue, it presents a tail risk, and it's very hard to predict on the outset how much that tail risk will be. Banks report in their financial statements what the probable losses and possible losses in regards to litigation, but often what ends up being ultimately provisioned and charged ends up being higher than that original number.
And I guess we don't even know where we are in the litigation cycle. I mean, it's not over yet.
We don't believe it's over yet. There's still risks outstanding. We believe that the U.S. firms have provisioned for bulk of the risks associated to the mortgage crisis, and which is why large U.S. mortgage originators or securitizers like Bank of America or JP Morgan, firms who they bought in the midst of the crisis, were really the big drivers of that cost. But certainly there are risks still outstanding. There are still firms who haven't fully settled the debris, if you will, of the mortgage crisis, namely out of the Europeans. Royal Bank of Scotland is one that has still outstanding potential settlement out there. Then there's, outside of the mortgage issue, there is the foreign exchange and LIBOR market manipulation that's quite significant. And if you think about it, currently, between the settlements that have happened 2014, 2015 on the foreign exchange manipulation, which is in excess of $10 billion for the banks that have settled, there's still a number of banks who have not settled on that issue. And we believe that Deutsche Bank is one that may be further exposed, particularly in relation to foreign exchange market manipulation.
So how does Moody's view these banks' credit ratings? How do you take this into account? And did you adjust any of your ratings at all based on some of these numbers?
I mean, as one example, due to the material cost that a settlement that BNP Paribas incurred last year in relation to settlement with U.S. Authorities on sanctions for violating sanctions of countries that were prohibited to engage with, that amount was quite significant. It was in excess of $9 billion, and as a result, BNP Paribas at that time we placed negative outlook on the credit. But if you step back even from that one specific issue, a few years ago, post the financial crisis, we actually repositioned this whole group of banks to a much lower baseline credit assessment, which is in the BAA category, from what used to be A or AA category before the crisis. And really why we did that is because we believe that these firms, based on their complexity of their business models, they're exposed to various tail risks. And those tail risks can be either as part of exposure to various capital markets operations and market risks they take, but certainly it can be, as we've seen now, through conduct risk and compliance issues.
Ana Arsov, great to talk to you. Thanks so much.
Thanks for having me.
I'm Rhonda Schaffler for The Street.